Hello, everyone. How we doing tonight? I was tired, so I just stopped the music. My bad if you guys were vibing. Just a quick sound check and a quick check that you guys can also see my screen as well. Sound is good. I'm guessing the screen is good as well. Awesome, awesome. All right, so we'll get straight into it, right? These Friday PA reviews, which they are 1 out of 2, right? I usually don't expect much people to be here, but it's always the same. So glad to see you guys here again. And it's not because it's a Friday that we shouldn't study price, right? Today, well, just this week was a classic end of the month week, right? If we look at the 5 candles, really our only beautiful day, if I'd say so, was Monday, where we just expanded straight into one direction. The other days were a little bit of a back and forth, if I can say so, right? A lot of search in the short, a lot of consolidation, but it is to be expected. We're looking to retrace into a close of the monthly candle. I just wanted to show off the current range we were trading in and also previous day high and previous day low, because on ES today we went and induced both sides of the range, and on NASDAQ we did the same. I do see this swing as inducement of this low and this swing as inducement of this high. So next week will be definitively defining as to right now we could see an open high, talking about a monthly candle, of course, as well as see an open low. So definitely defining. But if we're talking specifically about today, I did want to point out some key levels, right? Previous day high and previous day low are key levels of liquidity to look for. We're going to refer to the price action and the liquidity from the previous day to integrate into today. So whenever you see SMT at those key levels, it is of way bigger importance than anything else you might see. So I did want to point this out by showing how ES took out previous day low before going to previous day high, and same here. Actually, it might have been after, but SMT at previous day low, which we'll dive into in a second. But definitely this week, the 4-hour chart was the main chart I was spending my time on. If we look at the candles, right, I will remove these drawings very quickly. If we look at the candles, and more specifically that 6 a.m. candle, right, so 6 to 10 a.m., we'll see that we dove into our 4-hour order block and expanded higher, taking out external range liquidity. With hindsight, these can sometimes be hard to spot, but if you take a second and we just go in replay mode here, it will be very easy to spot, right? What did you do? Well, you just took out the previous range's high. So what are you going to do? You're going to retrace into a range. Now, I would use this specific range, which is not from a swing high to a swing low. So definitely the basic mechanical approach would be to utilize this range. But on a ranging day in a ranging market, there was a lot of different things to look at. But we dove back down into this order block, respecting this fair value gap for a high probability move to the upside. So I do want to first start off by marking this out as buy side liquidity, because we're going to dive lower and go look into it. And the aligned liquidity was this one, which means at this candle we would be looking for this high before the 10 a.m. candle, right? Which there was SMT, which because it is this high and there was SMT. But we'll see all of that very much more clearly once we dive into an hourly chart, right? That's how we'll be able to see everything. I'll just step out of replay mode very quickly. This is my order block. I am going to mark out that it's a 4-hour so it doesn't get confusing to you guys. You had a beautiful 4-hour order block right there. And we also had 8:30 news. If we look at that 8:30 news, at that point, it was high of day. We had manipulation. We invalidated the previous SMT, seeing as London took out the Asian ranges high and NASDAQ did not, right? There was SMT at this point in time. We took that out, had a beautiful news manipulation higher into an expansion lower, right? But once once your objective, just general objective is met, then you can expect us to run towards where price is expected. And when you are on Friday, I always, always, always look for a TGIF. So at that point in time, again, I'm not taking into consideration the future price action, I was looking for a TGIF retracement, and we did have that move. So due to the fact that we had 830 news, I start trading at the 830 news instead of the 930 news, because I do expect this to form the manipulation, the Judas swing for the New York session, which did not happen in this case. But again, we are looking at a day where well, it's a search in the short profile, right? We took out buy side of the range to get to sell side, to then retake buy side and retake sell side. There is no better example of what search and destroy conditions are. Does not mean they cannot be traded, but it does mean that you will have an unclear objective and they are lower probability conditions than anything else. But if we dive into a lower time frame now, to dive more deeply into this one, I was targeting this 4-hour order block. You had a beautiful short at this level through the inverted fair value gap that I utilized. But this is not the trade that most people will be taking, will be looking for. Why? Because the basic conservative approach to 830 news is, okay, look for the 830 news, sure, but wait for 930 before looking for a setup. And it's special because at 930 we had a Judas swing lower, which could frame the idea about going higher. And also, you formed it at a key level, the 4-hour order block, and more specifically as well with SMT. So I do have to find it because I remember it wasn't the clearest SMT. I think it was with the lows here, even before possibly. I am looking for it at this very specific moment. So this does seem to have been, oh no, okay, so there it is. If we see it, the low of this candle is 5547.75, and the other one was 0.5. So one tick away from being at the exact same level as the low we are looking at. I am on a 15-minute chart just so it's easier to see said liquidity, and NASDAQ went lower into it. So yes, in this specific case, ES was stronger. So if you were looking for a long, you would have taken the entry on ES. That is the main objective because you are in a 4-hour order block in discount. So you have your high time frame point of interest. Time aligns. A 930 news, what do you expect to see? Judas swing lower. So now you expect an expansion higher. Now that this objective has been met, you have SMT, which was confirmed once this swing was taken out pretty much. So if I put it straight, just so we can see, right at the 930 open, you had the SMT. So you could start looking for setup. On ES now, we did not retrace into a unicorn until 941, just like NASDAQ. Sorry, but ES was already further expanded because it was the stronger asset, right? And in some cases, taking the trade on the stronger asset will provide in less return, will basically give you an outcome with less returns. So this is something that you cannot truly, I guess, utilize, if I can say so. It's really something that you just notice on the spot. On the spot, I noticed that ES was already super extended. So instead of taking the trade here, I decided to go for NASDAQ, expecting that NASDAQ would catch up since in the last few days, NASDAQ was the stronger asset. So I was definitely looking into that. And now we invalidated our 930 fair value gap, which, yes, I do regard as of more importance than any other random fair value gap because time aligns. If I want to say that this is a bottom Judas swing, right, a Judas swing to the downside, I want to see us invalidate bearish arrays and then show our relative strength to the upside. And we did that when we formed this breaker block. Now this 1 minute breaker, which is, again, I'm never changing this. The most recent breaker, right, the first breaker formed, gave you a beautiful reaction, and more specifically, your beautiful unicorn entry, which I'm going to put in blue for a second here. If you were to ask me during this day, what would I like to have trade? It's that one. That's it. There's nothing else. I would be looking for that long. And also, just in regards, I do have the daily power of 3, and at that point, you could frame this low as your daily manipulation lower, your daily, basically your low of day, right? And on Friday, last week of the month, last day of the week of the last week of the month, and last day of the quarter, you can expect it to be a little wonky, meaning back and forth, right? Search and destroy. So we did go back down afterwards instead of continuing to expand higher, which pretty much was to be expected. But on that note, if we look at this beautiful entry and we utilize our 3PD array rule, your stop would be at this swing low right here. Now, you could utilize a different breaker, so more specifically that one, but for that case, I would refer to a 5-minute chart and see that this breaker is the only one I could use. And if I am utilizing this breaker, it is only a breaker after this candle closes, meaning I look for entries at 940. This is just some alignment you do have to do when you're playing hindsight. So 940, from this point, I can start looking for entries, which would mean that the entry looking at this would be that one. And yes, it is difficult. Okay, but which breaker do I use? 5 minute, 1 minute. Whenever I get clusters like this, where price went sideways for a while, I understand that in a 5 minute, or if it's a wide range in the 15 minute, it will be a cleaner breaker block, right? But what is that? That's just a 1 minute breaker right here, right? But just utilizing the consecutive candles pretty much forms the 5 minute breaker. So you did have a unicorn entry here, but if you're entering off of this PD array, your 3 PD array stop loss rule would bring you to the low of this candle instead. So you're comparing a 26 handle stop compared to, if I can just undo it very quickly, 30 handle stop. So the better opportunity was definitely from that breaker, whether you saw that as a 1 minute breaker or a 5 minute breaker, both are present, right? Time is fractal. And then utilize this fair value gap. I was expecting more of a retracement. Basically, we formed 3 gaps like that. I'm looking for a retracement into the one that overlaps with my breaker. I was just seeing that, and from seeing this consolidation, I thought we could retest mitigation block inside of here to continue higher. So this was my entry. My stop actually was at the low of this candle, and that it doesn't follow any 3PD array rule, but I wanted to see this gap remain open, because if we're going higher, all you have to the left is failure swings. So I want to see price go there quickly, right? Low resistance liquidity run should not retrace to the first fair value gap it made while it printed 2 more imbalances higher. So that is just understanding through experience of looking at price, looking at NASDAQ print. But we are going to look at the real setup, actually entering on this fair value gap. That is the right stop loss. But I meant that I entered on the lower fair value gap right here. And I did not want to see a trade past this inverted fair value gap. But no matter what I do, we are going to look at the model through a mechanical approach, because I want everyone to be able to see this and it be achievable, right? And the first retracement into a unicorn was at this specific level into the fair value gap above, and these gaps would be used for your 3PD array stop loss rule. Right now, let me just move this to the back so I can remove my purple line. Thank you. So you had a clear entry, 26 handle stop, pretty standard, little on the higher side, but nothing too crazy. Now, if we dive into a 5-minute chart and we refer to our intraday range at that point, our latest expansion range was this one. So definitely had a close low-hanging fruit objective. If we look at the first inefficiency in premium, we see that our partial would be at this 5-minute fair value gap, which, looking at it in a 1-minute chart and placing our take profit at this level, doesn't offer much return, right? Whenever that happens, I either don't take profit into it. So now, because I see the daily range, see how we have not moved a lot, I expected volatility, I would hold for longer, expecting it to reach to this data high objective right here. Or, again, the conservative approach, which would just be take out money here, but just take out way less, right? I'm not going to take profit 75% of my position at 1.26 R, because that is not a profitable approach to trading. So I do understand that I have to hold for longer. And where a good point of invalidation would be is midnight open. You'd be surprised at how many times we do go for midnight open to then reject that level pretty much. And it does act as support or resistance, right? See how we expanded through it, and now we retested that level, and that level held to push us higher. Why is this level so important? Because it is the open of the daily candle looking at New York midnight. So you do have to understand that this is an algorithmic level of power of 3. So seeing reactions off of this can be counted as algorithmic signatures, and you can take pretty much a conclusion off of those. So from seeing this, I was very confident to hold all the way to this buy side, but I did take partials early. I was on half risk because these last few Fridays, these last 2 weeks on Fridays, I was giving back a lot of my profits. So I just decided that I would be playing it safer. I played 3 contracts, took off one here and one just above, just below, sorry, actually, as I saw that. So I had like barely 1R realized at that point, but then it ran and I just trailed my stop loss along the way. Actually got stopped at 20 something 0.75, which was the low of a 5-minute fair value gap we created to the upside. So this one, right? The low, no, not that one. Where is it? I'm not looking at it right there. I was looking at Thursday there. The low of this beautiful fair value gap. So I just trailed my stop loss here, expecting that if we were going to go to all-time highs, which was the final objective, right? Going for the highs of, was it Thursday? So right now I'm looking at a 15-minute chart. Going for the highs of, yeah, indeed, Thursday. So that was my objective, form a new high of week and then retrace into a DGIF. But again, for the same things that I said at the beginning, we could expect it not to do what it's supposed to do, right? So I was expecting this 5-minute fair value gap to hold, and if it did not, I just did not want to live through a deep retracement, and apparently I did good because that deep retracement turned into an expansion lower. So right here, just if you guys want to see it in a 1-minute chart. So definitely a very small partial, which does happen, is unfortunate, but does happen. And then you had a very clear objective at 3.74R. If you wanted to completely remove your position there, do that, right? But I only had one contract left due to playing it safe earlier. So I decided I will be holding and trailing my stop. Instead of having 7.41, I got 5.2, which honestly I'm happy with giving back 2R for the opportunity. Sorry, for the opportunity of making 5, 6, 7, 8 more, right? That giving back of 2R, which I probably do 60% of the time, which here, let's count it, right? Out of 5 trades, there's 3 trades which I give back 2R. So I give back 6R total instead of just taking profit at the perfect high, which is pretty much impossible, right? And then I compare that to the 2 trades that made me 2R more, but most of the time when it runs, it's because it's trending day. So I'm looking at, I made 4R and all of a sudden my last contract is up 12, 13, 14R compared. So I am a big believer in runners and it leaving a trailing stop, but only if you can afford it, right? So if you're trading these small accounts, you're way better off playing micros and leaving your runner on. That is what? Always one contract. So if you're playing micros, one micro. Just leave a one micro runner and it will make you $200-300 more than all of the other ones whenever it runs like hell, like this morning, right? And then you'll see. One thing I did want to point out is that due to this 10 a.m. open going higher. So you know how we always talk about higher time frame candles being formed, and I am looking for an open low. I am looking for an open high. Well, at this point, if you're looking for higher prices, you want to see an open low because that is the development of your 4-hour candle. I'm going to remove this trade very quickly. We went over it. But you have the development of your 4-hour candle just going open high, and actually Dexter from Dexter Lab, if you want to see on Twitter, calls this a devil's mark, where you don't put up a wick for your higher time frame candle. In this specific case, your 4-hour candle. So we understand that this is very inefficient price action. It is not a balanced price delivery as we understand the algorithm's job is to do. So you could use this as a potential draw, and most importantly, as a potential reasoning for going lower. And from that, you can spot SMT. Where was the SMT? Right here. It's kind of hard to spot due to candles, but if I draw a straight line, you'll see it very easily in a second, right? So you had SMT at this level, Is it the cleanest SMT? Definitely not. Just because with the candles, it gets a little hard to see. Not SMT with YM, please. And just do top so we can see something. We had SMT at this level, which is one of the things you're going to be looking for if you're looking for a Rise model setup, right? And from this SMT, we understand that a breaker was formed. If I'm looking at NASDAQ, which again, from the SMT this morning was the weaker asset, which I now deleted, but NASDAQ was going lower, while ES was a tick higher, which still shows strength from ES. If I do draw this breaker block, why is this a breaker? Because of SMT. That's it. Because ES took out that high, you act as if NASDAQ did, because you know the algorithm will refer to that, and you know that for reversal to happen, the algorithm has to create divergence, which most people like to call a change in the state of delivery, but they see it the wrong way. So the algorithm has to go up before it can go down. The algorithm has to go down before it can go up. And when divergence is present, that is when you will see a reversal, right? So SMT formed the breaker block. So this is not a mitigation block. This is a breaker because there is SMT at the highs. And that's why I'm not concentrating on the entry on ES, because on ES, it was a stronger asset. So you would be looking to short NASDAQ, right? Now looking at this fair value gap, why this one and not the one on top? Well, if it would have retraced to the one on top, I would always prefer to take the entry on the one on top. But the truth of the matter is, you're never going to wait for it to retrace there, because it does not need to. This is balanced. It could just retrace to the first one and then expand, and actually in the best case scenario, that's what it does, right? So in ICT's words, enter on the first fair value gap, but allow for your stop to retrace to the others. 3P array stop loss rule. Fair value gap, inversion, fair value gap, meaning my stop would be at the high of this candle. Or 27 handles, right? Quite a large stop once again, but on a day that is very volatile like that, it will create breakers, it will create entries that give you wider stops. Now, as I said, in this specific case, the low-hanging fruit for me would disregard any rules that I have and just go for that 10 a.m. candle. Because what it can do is retest that open, and then form the low of the candle, of the 4-hour candle, before continuing higher. This does happen when you have an inefficient opening. Sometimes we just expand a little, retrace to the open, tap into it, form the higher time frame wick, right, by forming a low and then continuing higher. So this is just, again, through personal experience. But if we look at the latest expansion range, right, intraday range, and we go to our 5-minute chart to find our low-hanging fruit objective based on these rules, and I guess I still have the same problem as the other times, which I don't get. There we go. So 5-minute chart right here, and we look at the current intraday range. Where's your objective? Well, it's funny. The first discount 5-minute inefficiency is this fair value gap right here. And the high of that fair value gap is the 10 a.m. open. So just things line up at all times, and you'll start noticing these. Can you look at our class check? I saw another entry. Yes, sir. Why not? That is at around 10:30. Isn't that the exact entry we are looking at this moment? No, it is not. You're marking out the SMT from here and utilizing this fair value gap. Yes, yes, it is there actually. I'm gonna be honest, I did not see this tiny little guy right here, but yes, there was SMT at this level right here, as Justin, a student, just pointed out. There was SMT at this level, which means what? Well, once we trade below this swing low right here, this becomes a breaker. And now, if I just make that a little clearer to see, let's just do it here. So this is a breaker block, and now fair value gap at this level. Your stop loss would be, you have fair value gap, order block, and the SMT here. So you would have barely not gotten stopped out by a tick, and that's if you're not getting slipped out. So definitely give you a little bit of a rush, but does offer the opportunity of way more R right, than the other entry. So yeah, 100%. I'm gonna be honest, I just did not spot it. So yes, it is indeed the correct entry because it is the first entry that was formed, right? And you're, as I always say, as I just repeated just earlier a few minutes ago, right? I'm always looking at the first breaker. I'm just did not spot this one. So my mistake. Good thing spotting it, Justin. Thanks for pointing it out to me. Right, and on ES, that's just a clear gap, and you would have the inversion fair value gap, but on ES, that would have been a stop loss. Definitely. So unfortunate if you traded ES, hence weaker asset, stronger asset. And if you traded on ES and got stopped out, well, you had a re-entry possibility just lower, right? Which actually, this is the wrong retracement, so just here. So definitely opportunities. I am gonna look at the pessimistic approach because that is not realistic for most people, right? I just don't like showing up these big numbers, right? Final objective being here, left a runner on. I had in mind some relative equal lows that I saw right here. Those were pretty lows, if I can say so, right? It's understand. You just gotta understand it's time-based liquidity. I do understand that lows of the previous PM session will be utilized, and more importantly, the previous day lows, which got taken out on ES with SMT. So from that point on, when that SMT is formed and confirmed on this candle, why do I know it's this candle? Because if I look at ES, that's when it took. No, that's actually not. Yeah, because previous day low is here. Sorry. So previous day low is at this level, right? The SMT I was showcasing at the beginning. On this candle, it took out previous day low, while on NASDAQ, it did not, forming SMT. So if your target was previous day low, you would have reached that final objective all the way. But for me, most importantly, my big target was these relative equal lows right here, which are just a level that is too clean. Now, if we look very quickly at the target all the way down here, which you could have caught close to low of day, you're looking at a 20-hour trade just to these relative equal lows 15, right? So these are big numbers, and as I told you, Justin, right? This is the right trade. But I don't like uh showing off these numbers because I feel like that brings the wrong kind of people over. Not the kind of people who are willing to do the work, and I guess it's a question of ego and the fact that I want people to deserve it. I feel like you got to work for it. And anyone who backtests this model understand that, well, for example, my average R to a low-hanging fruit objective is 5.4, 5.32 actually. So you do understand that these are some big trade. You're looking to catch the daily expansion and more specifically the reversal to the daily expansion. So you do get a lot of return, but I just don't like showing it off. So I am going to look at this entry, which technically is the second entry. Just didn't want you to think, Justin, that your trade was bad. It was actually better. It was the right trade. And now I'm showing the I wasn't in front of my charts or I didn't see it at this exact time trade, which would be that one, which offers 2.33, which just this, you have to win, what was it, 33% of your trades to be a break even if you are trading 2.3 at just 2R with a 50% win rate. So meaning if you win if you win 30% of these, pretty much you're going to be break even. So if you're anywhere above 30%, you're profitable, right? And that's taking out your full position at your low hanging fruit and your final objective being here and possibly leaving your runner on for further prices. If you took profits here and broken even, or more specifically these equal highs, sorry, are pretty clean, well, from that point on, you don't care if it consolidates. Because you just have an alert set up. What I like to do, by the way, if you guys want some insight, I like to set up an alert somewhere like close to it. I'm in the 15 to 10 handles. Then I just add an alert here and just have the settings here. Basically, when price crosses, so crossing, and I just do create, and then I get a notification whenever it's that. So whenever I have a runner on, that's what I do. I have a notification. Oh, price is coming close to here. So now I get back in front of my chart. I see what it's doing, and then I take profit, adjust my stop, place another alert at a close to a different objective. So it's definitely a good point. Oh, that's unfortunate, Justin, that you're having Wi-Fi issues. as soon as I explain it. But yeah, the recording will be on YouTube, so no worries. But definitely a great trade as well, even though if it's the late entry, which thankfully got pointed out before I post that on YouTube with an incorrect setup for the Rise model. That would be unfortunate. Do we have any questions, right? Seeing you three out here, I'm guessing there won't be any. But if there are, I am ready to answer. We'll attack you at the back testing session for sure, for sure. Won't be one this weekend, by the way. So it's not every week that I'm gonna be doing one. Like for example, this week we had 4 price action reviews, 1 weekly outlook. I do have a private mentorship, which I do classes, which I'm gonna have a class tomorrow, and I did have a class this week as well, and I have my own personal projects plus my own trading. So I'm not trying to show off and say that I have the biggest fucking workload that anyone has, because it's not that much, to be honest, but it is too much for me to be doing a live 2 to 3 hour call about backtesting every week. So my plan is to do 2 a month, definitely. So for June, I am definitely on point with that. I did one the first week of June and the third or whatever, if it was the 4th week of June, but last week, right? So I am gonna try and keep to my word about doing 2. But what you can know with 100% certainty, there will always be at least 1 a month. But I do have to make it work with my calendar, if I can say it like that. Sounds fair? All right, all right. By the way, for anyone watching this on YouTube later, whenever I take these long pauses, it's because I'm reading the chat. All of these price action reviews are filmed based on live events hosted in my public Discord, the Rise Trading Discord. So the link is in the YouTube bio. I'm doing a little bit of publicity here, but just so you people watching on YouTube can understand that these are all from the live events. And I know the majority of my audience is people from the Discord who cannot be present at these live events. For anyone new, basically getting on one of my videos randomly, well, that is the why. But on that note, guys, we're gonna call it a night. You guys enjoy your Fridays, enjoy your weekend. Take your time, right? Take your time and just rejuvenate. That is the only word that can come to mind. But right, just chill. Take yeah, just take it easy, right? You too, Jen. Have a great weekend. We'll see each other on Sunday for our weekly outlook of the the first week of July, and the first week of Q3. You guys have a great night. We'll see each other soon.